What if you could not only protect your crypto portfolio in a coming crash, but actually grow it while everyone else panics? And this isn't just some pipe dream. It's actually what a small group of investors did in the last two crypto winners. They held specific tokens with unique characteristics that outperformed while the markets crashed around them. So, what do these projects have that the vast majority don't? Hey everyone, I'm Josh, one of the new hosts here at Coinsider, and to answer that critical question, I spent weeks analyzing every altcoin that outperformed in prior bear markets. I tracked their revenue models, their tokenomics, user trends, supply mechanics, really anything that I could find to reverse engineer their formula. And after filtering out the noise, I landed on 8 projects that match these exact patterns. They're projects I think have a real chance to thrive even in a bear market. The 8 that we're about to discuss all do this in their own way. Some generate a ton of revenue, others tap into industries outside of crypto, and a few have some of the strongest buyback and burn programs I've ever seen. Those are real sources of demand with mechanisms that reduce supply over time. And that's exactly what I mean when I talk about bear proof, aka they're tokens that'll hold up because they have strong fundamental forces behind them. So without further ado, let's kick things off with my first project, Hyperliquid. It actually started off as a decentralized perps exchange, but it's now become a full-fledged layer 1 ecosystem complete with spot trading, EVM compatibility, and a whole suite of dApps on the horizon. And they've already pulled off one of the biggest airdrops in crypto history. And rumor has it that they still have a massive stash of tokens set aside for future airdrops. But here's the thing. Hyperliquid is consistently topping the charts in daily trading volume, which means it racks up some pretty insane fees. And a chunk of those fees goes into buying back and burning hype tokens, which creates a consistent supply squeeze. And on top of that, they've got this unique assistance fund that acts like a price insensitive buyer, which scoops up tokens regardless of the overall market conditions. So if you combine their impressive revenue, their big token burns, and potential future airdrops, you get a token that really could hold up nicely even if a market goes cold. So now next up is GeoDNet, a decentralized GPS correction network that targets industries where accuracy literally can't be compromised. So think self-driving cars, drones, high-tech farming, and advanced robotics. So you see, regular GPS has up to a 2-meter error margin, which might be fine for Google Maps, but it's nowhere near good enough for complex autonomous systems. So that's where GeoDNet comes in. They use a global network of miners to provide near centimeter accuracy, and businesses pay a pretty penny for that level of precision. What's interesting though is that 80% of GeoDNet's revenue is used to buy back and burn geode. So every time they make a sale to a big company, they're effectively making their token more scarce. And they also do annual halvings of mining rewards, which further tightens that supply over time. So you've got a token with built-in deflationary mechanics backed by real business demand from industries that don't necessarily care if Bitcoin is pumping or dumping. And if anything, as automation and precision tech become even bigger industries, demand for their services could grow regardless of what the broader market is doing. And that's why I really think that Geode could be one of the few to outperform during a potential bear market. So next up is a project called Rollbit, which sits at the intersection of gambling, sports betting, and high leveraged trading. It sounds almost too good to be true, right? Like, how many different ways can you degen in one place? But they've really been pulling in millions of dollars every single month because people don't stop gambling just because the market is down. And that revenue stream is partially used to buy back and burn Rollbit tokens. And they've already burned more than half of their total supply. Like, literally no joke, over 50% is gone, which is insane for a token that is still relatively under the radar. So it's pretty easy to see why Rollbit might be able to weather a bear market. As long as people like to gamble, the platform stays profitable, and that profitability translates into continuous buybacks. And that really is like having a built-in defense mechanism for the token, because whenever that price dips, there's going to be that consistent revenue waiting to scoop up cheap tokens off the market. So another token that really plays off of these themes is the BitGet token, aka BGB. Now, I really like this one because BitGet has recently started doing quarterly buybacks and burns of their token, using 20% of their exchange and wallet profits. And this is actually huge because they are now one of the top exchanges in the world. And in late 2024, BGB actually rocketed a ton, and it reached the top 15 on CoinMarketCap at one point. And one specific reason why I think BitGet and their token will continue to do well is because of their unique listing process. You see, BitGet has an eye for promising projects, and they often list them really early, way before they get listed on other exchanges such as Binance. They've done this with a ton of different projects such as Act, Peanut, Tau, AIXBT, Moodang. I mean, really, you can name it. So users on BitGet get that early access to these tokens when market caps are low. And then when Binance inevitably lists them, they're already much higher. That's a huge strategic advantage for people trying to use BitGet, which is why I think that they will continue to make money even in a bear market. And their buyback and burns will continue to put upwards pressure on their token when it's needed the most. Okay, so another project that really caught my eye when I was doing my research is Grass. You see, while most AI crypto projects are big on these promises and short on real substance, Grass actually is generating some impressive revenue. They run a web scraping network for AI. So they pump out real-time data for training and inference so that AI models can stay fresh with up-to-date information. So think about this. We're talking about global companies paying for daily data by the terabyte, which gives Grass a revenue stream that doesn't hinge on whether or not crypto is pumping. But to be honest, their tokenomics have some quirks. There's a token unlock schedule that might cause additional supply to hit the market. But if the team introduces a proper buyback and burn program, then that could offset any potential emissions. But either way, their large enterprise deals and massive user base give them a real shot at riding out the storm that would otherwise sink other AI-related tokens. So next up, we have a project that might look a little goofy on the outside with its meme-like branding, but its revenue is literally anything but goofy. You see, Banana Gunbot is dead serious about on-chain trading. It's an automated trading terminal that helps users snipe new listings and execute trades across multiple blockchains, raking in millions in fees from their devoted traders. Now, part of those fees goes to stakers, while another part goes towards buying and burning their token from circulation. But what really sets them apart, though, is that there's no VCs waiting to dump on retail, which really is a breath of fresh air in this industry right now. So even if the market's sour, there's always volatility, and trading bots thrive on that volatility. There's more trades, which means more fees, and more fees means more buybacks, which is a win for token holders, especially when other altcoins are struggling to stay alive. So another project that plays off of these ideas is what I consider to be one of the most innovative DeFi projects in this cycle. It's called Fluid, and it takes a novel spin on DeFi by combining lending, vaults, and DEX functionalities into one sleek package. They offer something called Smart Collateral and Smart Debt, which basically lets you earn yield on your collateral even if you are borrowing against it. That's extreme capital efficiency, and it's a big reason why they've grown so fast. Now, they're close to hitting a key revenue milestone that triggers their buyback program, which could add even more buying pressure to their token. So it really is one of those protocols that doesn't just rely on hype. It gets real usage, and that real usage brings in revenue, which then can help cushion the blow if the market starts to tank. When everyone else is cutting costs and shutting down, protocols that keep raking in fees often come out the other side even stronger. So with that in mind, my next standout project is Jupiter, aka the Solana aggregator that's been making big time waves lately. They give users the best routes for swapping tokens, bridging to different ecosystems, and even setting up limit orders and other trading mechanisms like that. It's basically the go-to place for serious Solana traders, and that means it rakes in tons of fees every time someone does a swap or a bridge. But Jupiter isn't just letting that revenue sit in the treasury. They're using half of it to buy back Jupe tokens and lock them up for 3 years. They've also already burned around 3 billion tokens. So sure, there's still a chunk of supply out there, but those big burns and lockups go a long way in making the token more resilient when times get tough. So if Solana keeps attracting new projects and Jupiter remains the aggregator of choice, then you've got a scenario where fees keep rolling in, buybacks stay strong, and the token supply continues to shrink, which is basically the recipe for outperformance even if the market stalls. So there you have it. After applying my filter to hundreds of projects, I found 8 with real revenue models, powerful sinks of buybacks, and the kind of traction that doesn't evaporate the moment prices dip. Now, are they guaranteed to go up? Of course not. But this is crypto, and let's be honest, nothing is guaranteed. But compared to the countless projects that would crumble the second the hype fades, each of these actually has something tangible that could keep them afloat. Now, I know we've been talking all video long about which projects will do the best when the bear market arrives, but you may be wondering, wait, is the bear market already here? Well, to find out what we think about that, just watch this video from my co-host, Josh N.